What up, everybody? Welcome back to Trading Unfiltered. Got your boy Tatted with my main man.
Sellers.
Boom. And this is actually our first episode. Excited to do this. This is going to be fun.
That's right.
But our first episode is we just want to talk about something we think is the single most important thing for any trader, whether you're new, experienced, somebody trying to find consistency. Risk management, man. Like, I know we've both been down the roads of having no risk management, and we have some horror stories around that. So we just want to try to share some insight with you all on how we think we can help you save some major losses, some headaches, and keep you in the game for a sustainable amount of time. So, in my opinion, man, most important thing we can talk about.
No doubt.
All right.
100%.
Well, let's do this intro thing, and then we'll be back to talk about some risk management. All right, all right. So, risk management. Before I show everybody this tool we're about to pop out, um, you want to talk a little bit about how a lack of risk management can lead to ruin?
Absolutely, man. As you already know, I've told you a bunch. My first couple of years trading it was a horror story. I put myself, my family, I put us in a bad spot from a lack of risk management. And it took me a long time to learn, longer than it should have, really. I could make a lot of money really fast, but I could lose a lot just as fast. You know how it is.
Yep.
I was using, I guess you'd say, a very discretionary form of risk management, but I needed to, like I have now, a little more of a system. I still have some discretionary terms of how I manage risk, but it's so much tighter now, and there's not a whole lot of guessing. You know what I'm saying? It can destroy you, and then the thing is you still want to be trading, so you've got to get this down. You cannot trade without proper risk management, as you know, and as I've found out the extremely hard way.
No, 100%. Like, you'll talk to any long-term successful trader, and they're going to tell you the only way you can be successful, number one, is you got to stay in the game, right? Like, if you blow your account or you take it down to nothing, that can ruin you. Not everybody has the means to just fund a whole new account. Like, that's not real, right? Like, you blow your account, you got to work incredibly hard, or maybe you just never have the opportunity again to really trade.
Exactly, man.
So you got to stay in the game, and you got to create some sustainability. And I've been there too. Huge losses, huge wins, followed by massive losses, or big wins followed by bigger losses. And you got to have some sort of risk management approach. So what we really wanted to talk about was risk management. And there's a tool that we use to help with our position sizing and to help with our risk management. And it's something we wanted to share with you all that we think could be a benefit, really, to keep risk small and tolerable, especially for new traders. I think this could be helpful for senior traders too, but I think really this is going to be something that new traders could really benefit from. But this is still something I use every single day. So let's pop in and check that thing out. So this thing here is a tool I use every single day, mainly for my position sizing. And I didn't want to talk so much about the position sizing portion of this, which I'll kind of dive into a little bit. But the main reason I like this web page is because below the position size calculator that's up here, Below that, we have a consecutive loss management section that shows what will happen to your account if you take consecutive max losses based on whatever your risk level is.
And I think that's another thing with newer traders. Just I mean, it's when it's right there on the page for you and you can see it. It puts it in perspective so much better. Because a lot of times when you first start out, even if you have an idea of where you want to risk from, you might not stop out where you're supposed to, or you might not want to take the loss. And that's real. That's how you feel when you're
100%. Like I think position sizing is something that goes hand in hand with risk management. If you don't position size accordingly and you don't calculate that out ahead of time, it can really hurt your account, either because you're not making money on trades you should be making money on because you're not sized in right, or you're taking big losses because you're, again, not sizing appropriately. So it can go both ways. It can minimize your wins, or it can maximize your losses if you don't have a somewhat of a systemized approach to how you enter in and position size accordingly.
Yeah. I found all of that really confusing when I first started. And I know you're about to talk about it, but your risk tolerance, I didn't understand how I would risk what percentage of my account, and then like we've talked about before, the sizing or whatever, and the risk tolerance. I mean, it's a lot to take in when you're first starting out, for sure.
It is, and we're going to talk about this, and we'll try to break it down. But I'm gonna post this link in the bottom of our description, so anybody can just click on the link and it'll take you to this page. I would recommend you come to this page and kind of just mess around with it, because it's customizable to your account size and what your risk tolerance is. But just for this example, I'm just kind of going off of this. Like, somebody has just opened a new account above PDT, and they're either a relatively new trader, or it's somebody who's been in the game for roughly a year or two, and they're trying to find some consistency. So this example is based on somebody having a 30K account, and this risk is the amount of risk you want to take on the given trade as a percentage relative to your entire account. So I'm plugging in a 1% risk for this trade. So you have a 30K account, you're willing to risk 1% of that 30K account, or $300. And then the entry and the stop loss, that's whether you're going long or short, whatever. I am kind of just making up numbers here, but let's say I enter in at $2 and I consider myself to be wrong at $2.50. And then your risk to reward, whether you're going for the 1-to-1, the 2-to-1, the 3-to-1, whatever, I plugged in a 2. So you're risking 300 with the hopes of making 600. 2-to-1 risk reward. Fees and slippage, if you want to put that in, you can put that in, but for this example, I took them out. But you plug all those things in. Of course, you hit calculate, which it's already calculated out here for us. But it basically tells you, like, if you're willing to get in the stock at $2 a share, you're wrong at $2.50, and that's where your stop loss is. This pops out for you. You need to take 600 shares of this particular stock in order to go from $2 to a stop loss of $2.50, risking that 300. So it calculates out for you the exact share size you should take on a trade. And like I said, this is customizable. So you can change it. You can change the price, you can change the risk, you can change the account balance, you can change everything. But this tells you exactly how many shares of something you need to get involved in that particular stock to keep your risk where you want it. So I think that's hugely important. I think position sizing is something that goes hand in hand with risk management that's just not talked about. Like you were saying, you said it, like, if you don't position size accordingly, you can either do really badly on a trade, or you can miss out on making a solid gain on a trade because you didn't position size accordingly.
Exactly, man. Exactly. It's
double-edged sword.
Yeah, I know, man. It really is. And
I got it. But below this is what we really, really wanted to get into. So I love the position size calculator. Absolutely love it. and I think everybody should use it. I've been trading for a while, and I still use that on every trade, just so I can calculate out how many shares I need to locate. If nothing else, like it tells me how many shares of something I need to locate. Great tool. But where we really wanted to talk about was this table, this consecutive loss management table. So this table shows you if you hit X amount of max losses, whether it's 1 all the way down to 20, what it's going to do to your account. And in my opinion, if you have a broker that allows you to set a daily max loss with them, set it with the broker and don't ever move it. Like, whether you want to keep 1%, 2%, whatever your risk tolerance is on your account, like set that at broker level. If that gets hit, you're done. You walk. But I recommend go ahead.
Oh no, I was gonna say I apologize for my camera.
Oh no, you're good, man. We see you. But the main thing with my recommendation of having a 1% max daily loss is because let's say you have that 30K account and let's say you experience 5 max losses in a row. That only takes your account down $1,500 off of 5 daily max losses. Even if you take 10, it takes it down $3,000. Even if you take 10 max losses in a row, which can happen, will happen.
Oh, I've done it.
It's inevitable at some point. It's probably inevitable for most people. You're going to hit 10 in a row at some point. You're going to have a drawdown. It's going to happen. But even if you have 10 max losses in a row at a 1% risk of your account, it's not demolishing your account. Your account's only down a few $1,000s and it's still keeping you in the game. And I like this chart because it shows what the required performance is for you to bounce back. And to have a 10% account growth in a day after 10 max losses isn't unheard of if you have a knockout trade. So it doesn't really take a lot to get your account back to where it was, but this keeps you sustainable for a very, very long period of time if you have multiple max losses in a row, which, like I said, you're going to experience drawdown. It's part of it. So in my opinion, 1% max loss keeps you in the game for a long time at a very, very tolerable level while you learn how to trade. I'm not saying there's anything wrong with sizing up down the road or increasing your risk tolerance, but I think starting out that 1% is, for me, it was a game changer.
Yeah, it's
in the game a long
really
time.
is. I mean, that's just it's perfect the way you're saying it, and that amount of risk. I mean, because if you can't determine being wrong on something and that amount of risk not being good enough for when you're first starting out, then I mean you shouldn't even be taking the trade. It's
right. And on a given trade, if you're risking 300 with a 2-to-1 risk reward, or even 1-to-1, to make a few $100 or $600 on a trade on a given day, even on a singular trade, that can add up very quickly.
Yeah, man. I mean, I know you, and like we talk about, you see on Twitter these guys making these monster trades or whatever. If you can make $600 on a trade, that's great. I'm fine with making $600 in a day.
You do that 5 times in a week, you've had a really solid real life week.
Yeah, exactly. I mean, think about, if you're working or whatever. I mean, who makes that at a job?
Right. Yeah. Who makes $3K a week at a job? Like, those are some higher end jobs if you're making $3,000 a week.
Exactly.
Like, you extrapolate that over the course of a month, you're talking roughly 12 grand at the end of the month, if that's your average gain. Of course, we're talking in averages and, whatever. But the crux of it comes down to risk management. And people are going to be like, oh, well, if you only risk 1%, you can't make any money. Well, that's what we're kind of trying to dispel too. You only risk 1%, keeps you in the game, but there's still potential to make some really good real world money while keeping a low risk tolerance. Because people are like, oh, day trading is so risky, you can lose your entire account. Yes, you can. 100%. That's accurate. You can lose it all in one trade. We've seen it.
I've done it.
Yeah, we've experienced it. But this keeps you in the game. It keeps it low risk, and it gives you just more screen time. You blow up your account, your screen time is done unless you paper trade. And I just don't. My opinion on that is like you just don't experience the real world emotions from paper trading that you do even with money with small size.
Man, and I've in the past I've tried paper trading on little Webull accounts and stuff like that, and I just you don't care when you're paper trading.
Right. You go all in, you stomach max huge losses because it's not real. The emotions are entirely different. So this just keeps you in the game. But one thing I wanted to show with this, so this whole table is around a 1% risk tolerance. Like I said, even if you experience 20 max losses in a row, which I hope is unlikely and not going to happen, but even if that happens, you're down in your account $5,500. It's not the end of the world. You are still okay. I don't think anybody's going to experience 20 max losses in a row, hopefully without making some adjustments along the way. But this just shows you, even if you do, your account's not blown. You still have a solid account to use and to grow with. But let's say you change this, because some guys will risk, I'm going to change it to 5%. Still considered pretty low risk in the grand scheme of things. But even if you change this to 5%, let's look how that changes. Massive. So now, if you experience 5 max losses in a row, you're down 8,000. And then you need a required performance of almost 30% to get back to where you started. And then, worst case scenario, or even worse case than the 5, you experience 10 in a row, which again, depending on your system, your strategy, whatever, can and probably will happen. But with 5%, 10 max losses in a row, you've almost lost half your account. Just and like that.
Before I have done that.
Yeah. 10 trades. You think about it. We take 2, 3, 4 a day, sometimes 5. In 1 week, if you have a bad week with a 5% risk, you can blow half your account with 10 max losses at a 5% risk. 5% doesn't sound like a lot. But when you have 10 5% losses in a row, it's literally almost cutting your account in half. And then your required performance to bounce back is 67%. That's not easy to do. That's incredibly hard. So this perspective for me is just everything. Going from 1 to 5, it's pretty mind-blowing. And then there are some people who will risk 10%. There are rooms out there. There are people out there that risk 10%. And again, if you ever get to a point where that's your thing and you can become successful with that, great. I'm just kind of predicating this more towards newer people or people who are trying to find consistency. I still don't ever risk 10% of my account on a single trade. Not anymore. I've done it many times, unfortunately, but not anymore.
I've risked more than that.
Yeah. So this table is even more mind-blowing. 10% risk, 5 max losses in a row, your account's cut in half. 10 max losses in a row, you're hurting. You're down to 10K from 30. And then your required performance is almost 200% to get back where you were. That right there is an incredibly tough mountain to climb.
I mean, it's pretty much impossible.
And that can really take somebody out of the game. That can really mess with your head, mess with your psychology. I mean, that can be detrimental, obviously, to your account, but just to your mind and your mental state as well. So, again, I'm going to take this back to 1. If you take it back to 1, I mean, look at the difference. Night and day. 20 max losses in a row, you still have the bulk of your account. And I don't think anybody's going to hit 20 max losses in a row.
And I know that it's cliche and you hear it about the small gains adding up, but I mean, it's sort of like, I mean, are you trying to hit this quick or are you trying to do this for a long time? You know, it's
that's it. Yeah. Sustainability is like the name of the game, because we just kind of lay it out. Like if you're risking 300 on a trade and you lose 10 in a row, you know, your account's not hurting. But let's say you've made 300 10 days in a row. Like, what's that doing for your household?
Exactly.
Right? Like a $3,000 week, especially if you extrapolate that over the course of a month, $300 doesn't sound like anything. Everybody's like, oh, $300, whatever. You make that 5 times in a week on average. Like we said, you have a 3K week, or I mean, that's a lot of money. Like 3K a week, 12K a month, like even half that, even 6K a month, especially if you're doing this on the side. Unlimited potential, right? We know that. There's guys out there that do this and make buku money. But there's guys that do this more often than not and blow their accounts. Trading on Twitter is a highlight reel. 100% a highlight reel.
Absolutely.
It's not real. This is real. Risk management is real. Letting those small gains add up and making some nice money, that's real. And yeah, there's unlimited potential to make massive amounts of money, but like I said, man, the majority of people are blowing accounts, not making money.
Oh, and as you know, I have been one of those people many times, and I
Right.
was for a while. I mean, I think a lot of people are, but it's easy to get in a vicious cycle when you're starting out and you think you've got it, whatever, you know. Then maybe you might even make it up, build up a big account with bad risk in certain market conditions, and
Yep.
you know, I mean, it's not sustainable, and I had to learn that the hard way, and it took me a really long time, probably longer than most people. You know, as I've said to you, I mean, I'm now to the point where I respect risk pretty well, and you know, sometimes I'll size accordingly for wider risk, but most of the time, I'm pretty damn sure where I want to get in on something, and I know what my risk is. Even if it's slightly, you know, loosely calculated, I'm never putting myself in a situation where I could, you know, do something detrimental, whereas used to I always did.
100%. And we talked about this too, and I would say this to you all out there. You know, I'm doing this whole example with a 30K account, just assuming somebody's over PDT. But even if you have a new account with a broker of $5,000, right? I understand at that point you're probably going all in, or maybe risking even half of your account on a trade, or not risking half your account, but putting in half your account on a trade because you're trying to grow a small account, and that's really tough to do unless you're going a little more aggressively on the equity side of how much you're putting in on that trade, which is completely understandable. But even if you do that, you can still have risk management. Maybe instead of risking 1%, maybe you risk 5%, really aggressive, even 10%. But you know, I'm kind of just talking in generality. So this is going to be different for everybody. But the great thing about this tool is it's customizable. You can plug in whatever numbers you want to plug in based on your account size, based on your risk tolerance. But it's just a good snapshot to show you the importance and the power of risk management. And that's something that we would both recommend. You have to start there. That's like step one.
And I'm glad you touched on that. I'm glad you said that, because I think it's confusing for a lot of people when you talk about, or in the beginning, when someone says, you know, risk 1%. And you think, well, I mean, what can my position size be? I mean, how do I risk 1%? I'm not going to make any money, you know. But when it's explained like that, I feel like nobody usually explains it like that. I mean, you hear risk 1%, but you're thinking, well, can I use my whole account? But I mean, when you're trying to grow a tiny account, you have to. I mean, you don't have to, but for me, when I was growing a small account, when I had like a 5K account, I was going all in. But
same. And you can go all in with a small account, but still possess risk management. You can do both. And I think that's something that maybe gets overlooked. You can put that whole 5K on a trade. I don't think there's anything wrong with that. But maybe your risk is at that point 5% or maybe 10%. You know, whatever you can stomach. But yeah, I think you treat small accounts a little bit different. But again, this tool is customizable. You can use it for any account size you want. 5K, 50K, 100K, doesn't matter. And you can fiddle around with the numbers until you find something you're comfortable with. But new traders, people trying to find consistency, that 1%, low risk, tolerance for a lot of max losses, and still keep your account at a manageable level. So that's what I wanted to touch on. Anything you want to kind of end on, or anything you want to add before we sign off this thing?
Man, just that, it's something that I wish I would have really focused on in my earlier years. And, I think it's a lot of people take it for granted and don't respect it. And it'll ruin you, man. I like I've said before, and I've gotten into it a little bit. I always had other stuff I was doing, other money coming in, ways that I could refund accounts. So I didn't take it as seriously, but I mean, it got to a point where, we were hurting financially, my family, because I kept blowing accounts and stuff. I'd have a big account and I'd get to the point where I was able to start wiring money out. And next thing you know, I'm blowing that account because of my poor risk management. So that's why at this point in my life and this point in my trading career, I'm thankful that I have a good system of managing risk. But, like we've been saying, it's everything, man. It's more important than your strategies, It's
numero uno. Any real pro long-term trader is going to tell you there's nothing more important than risk management, and I couldn't agree more with that. But it's our whole perception on that's funny, because you kind of already touched on it. Like, we'll laugh at $300 gains or $100 gains. You do that on average, and people don't get excited about that. But if somebody loses $300 or $100 multiple times in a row, and now they're down 5,000, 6,000, 8,000, then they're like, oh wow, this is really bad. But we just don't ever think about from the inverse perspective of those small gains adding up. But the only way you're going to get that is risk management. Gotta have it. So, man, I'm glad that this was our first episode, because I don't know that we'll ever do another episode more important than this one, especially for new traders or even somebody trying to find consistency. You got to possess risk management, and position sizing is part of that, but you got to have it all.
100%, man. I totally agree with you. I think this is, it's important. And I know, you see people talk about it all the time, but it's getting in depth.
Yeah, no, you're right. It's one thing to talk about it, but it is another thing to actually do it and follow through with that. That's why I can't recommend enough. Dude, he's got the hat on, right? Cobra Trading, phenomenal broker. We use Cobra. We love Cobra. Cobra will let you set a daily max loss at broker level. Do that, set it, don't remove it. You hit that, you'll walk. But
and I actually just lowered my max loss just to keep it a little tighter, because I'm trying to be more disciplined with myself. I had my max loss a little wider earlier this year. I had it really wide at the beginning of this year. And now I'm trying to even keep it tighter, It's
ain't nothing wrong with that. Especially going into holidays. We all need a little extra money come Christmas time. You want to take a fat loss, when you're trying to buy your kids presents. So it's all about perspective and keeping the bigger picture in mind. So I'm glad this was our first episode. We, of course, will come with more, but we just wanted to kick off with what we felt was one of the most important topics in all of trading. So glad we did this first, man.
Same here, man. And I apologize about my camera messing up.
No, it's all good. It's the message that matters. And we saw the charts and the tables. And to everybody out there, man, we appreciate y'all stopping by, watching. If you have questions, leave us a comment. We're on Twitter. We'll have our handles in the video. We'll have the website in the video. But please, comment if you have questions. We'll answer those. But we're looking forward to doing this, and I guess we'll catch you on the next one. Peace, brother.
All right, man. See you.